The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
And joining us now to discuss the crypto markets is JJ Kinahan. He is CEO of IG North America. Welcome back, JJ.
Thanks for having me, guys. Great to be here. How are you all today?
Great to see you again. Bitcoin broke above $20,000 finally. It's been a couple of weeks at least since it's seen a 20 handle. Many people are saying, or they're attributing this to a short squeeze that happened in the market overnight in Asia. But nonetheless, it's a significant, or I should say it's a semi-significant technical level that we've broken above. The advocates, the pundits on Twitter, of course, are saying I'll never see below 19,000. Are they correct? Or is this just a temporary bull market, if you will, before it goes back down?
Well, I think actually, I'm sorry to jump in. I think today's actually a really big test for Bitcoin, to be honest with you, because, one of the things when I look at Bitcoin and I look at how so many of our clients use it, I always see it as a little bit of a confidence measure. And so as we've seen this rally in stocks over the last couple of weeks, it's been, nice to see Bitcoin sort of rally with it. As you said, we had that bigger move overnight. But again, we were just trading in the mid 18,000s a couple of days ago. So to see this move is fantastic. And the reason I'm so focused on today is because as the NASDAQ has suffered because of some bad earnings there, it's interesting that Bitcoin has held up throughout this. And so if it can actually build on this momentum, it will really be, I think, an interesting and powerful move for Bitcoin overall to be able to hold this 20,000 level. Let's face it, 20,000, although technically not quite as big a level, psychologically is a little bit bigger level. People are, it's kind of been the fulcrum point, if you will, of this for many people over the last few months. And so with Microsoft having terrible earnings today, Bitcoin holding up, it'll be interesting with Apple if they have bad earnings. If Bitcoin still holds above 20,000, I actually think it's really, really a big deal overall, and something that those who are very bullish on Bitcoin longer term can start to make a much bigger deal out of.
Yeah, I think, for context for people who are watching this and trying to understand why we're talking about tech stocks is because for so long, or at least for the past few months, a lot of people have made a lot of hay about how crypto has been moving alongside, particularly the tech market, tech stocks, because of it being a more of a risk-on asset. And in this situation, we're seeing a lot of disappointing earnings, as you mentioned, Microsoft, Alphabet yesterday. We're seeing a couple of others coming in and really just not coming in with the numbers that Wall Street had expected. Their stocks are getting hurt left and right. Hello, Meta, how you doing? And so what exactly, but nonetheless, I mean, the overall theme that that crypto is still this sort of tech risk on. It seems to you don't think this is a temporary blip. You think that this might actually signal something else, but then what's the probability it is that something else?
Well, if we look at the what we're seeing right now, and in terms of probabilities, I would look to the options market overall for probabilities. And what I would tell you is that when I look there and I look at a 22,000, if I want to look at that over, we'll just say the net from now until December, to give a little bit of a time frame for people, the probability that the options market is telling me is about 36% right now that we can trade up there. So something for people to keep in mind when they look at this, that options markets, whether you trade them or not, are going to give you probabilities. And so again, looking there's about 36% probability we trade up near 22,000 between now and the next 65 calendar days. All that being said, I really think that it has a great opportunity to hold 20,000. And I think it's important, to your point, that it broke away from the tech stocks today, because it is showing a little bit different behavior than by far we have seen over the last few months. So actually, if you're truly a Bitcoin bull at this point, I actually think you kind of hope that maybe we do have some bad NASDAQ earnings, but at the same time, Bitcoin holds the 20,000 level
Although,
because, again, I think that makes a very bullish case for it in the nearer
JJ,
term.
where do you think this
although when you
optimism
say
is
it's a
coming from,
third,
and what will the
Oh,
Fed, dynamics, how will the Fed meeting next week maybe change the dynamics?
well, obviously, when one of the other breaks Bitcoin's getting today is that yields are off a little bit. We see a bond rally. Hard to believe that given the 75 basis point expectation out of the Fed, that we might not see a little bit of a pause. That said, again, I think it'll come down to how much of this is built in, and that's why I'm not. We're trading base close to over 20,500 right now. So I think that's why I give it at least down to the 20,000 level. May it go underneath it? Yes. If it goes underneath it for just a day or part of a day, fine. That maybe on Fed day, but does it have the resilience to then bounce back above 20,000 and hold it? As I said, I think that level psychologically is so big for so many people. As I talk to, our clients aren't necessarily those that are constant Bitcoin enthusiasts, but they trade it on a regular basis. So for them, that's, I think, again, a long-term bullish case to be made. Those are the people you have to keep as buying it.
I'm gonna ask something that right now is many ways theoretical, but we've been looking
Sure.
at the Fed raising Fed funds rates now at 75 basis points at a clip for the past few sessions, and the guess is that they're probably going to do that again in next week. Do you think that maybe it's time to really talk about accelerating the bond sales? In other words, lightening the load on the assets on the Fed's balance sheet. That they're holding a lot of bonds on its books. Obviously, trillions of dollars. It's picked up since since the start of the pandemic, but really since the start of the financial crisis. Do you think it's time for them to maybe increase quantitative tightening and look beyond the Fed funds rates to dampen inflation at the cost, of course, of causing a recession, a real recession?
I think that would cause a really quick recession, as they're doing this tight wire act to say, and I also think that would be very bad for cryptocurrencies in general. But that being said, it seems as though you're more of the, hey, let's just pull the Band-Aid off. And I think
Yes.
that would be a little bit of the, what's that?
Yes, that is my bias.
Yeah. I think there's a lot of danger in doing so. And in fact, some of the conversations that seem to be happening around the Fed right now is, do they do this 75 basis point raise and then take a little bit of a break? And actually, I don't think that's the worst idea. And the only reason I say that is because traditionally it takes about 6 months for this stuff to work its way through the economy. So we've had this rapid succession of rate increases, and we haven't necessarily seen all the implications of it. So I think now, I think you're making an important point, and that is the next tool to not necessarily raise rates, but to start doing is the tightening in the way you're talking about. So that may be an option that I don't know has been considered as heavily as it should be, but is to do both at the same time and be more aggressive and just say, hey, we're dumping the load here. Whatever happens is going to be fallout. I think would be a pretty terrible fallout.